When I started out, I was so scared to invest because I was afraid to pay tax. But ultimately what I've learned now is that paying tax is not a bad thing because it means that you are actually making money. What's up guys, welcome to my channel. My name is Louis. If this is the first time that you're seeing my face, please consider checking out some of my other videos where I talk about real estate, investing and personal finance. If you like the content that I create, consider subscribing to my channel and this will support me tremendously. With that said, today's video is kind of a touchy subject, and obviously if you clicked on this video you know what it's all about. And it's about capital gains tax that we as investors need to pay when we sell a stock or a share in a company. Paying taxes is a touchy subject for me personally, and probably for you as well, because there's no one that likes to pay taxes. Although we are legally obligated to do so, we want to try to minimize our taxes and legally pay as little tax as possible. At the end of this video, I'll share a tip with you guys that will help you to reduce your capital gains taxes, specifically when selling stocks for a profit. With that said, there's two things that we need to understand when it comes to taxes. And the first thing is there's a difference between income tax and capital gains taxes. So income taxes is basically a tax that you as an individual pay on your salary or a consistent revenue stream, like working a 9-to-5 job, or even, for example, being a stock trader. So when you are a stock trader, you trade stocks daily and you buy and sell on a consistent basis. And SARS sees this as a revenue stream, and therefore you will pay income tax on that. Capital gains tax, on the other hand, is completely different, and this is where you hold on to an asset over a long period of time, usually a stock or immovable property like a rental property or even residential property, and then eventually sell it for a gain. This is where you will then pay tax once off on that specific gain. So for the purpose of this video, I'm going to keep things simple and only talk about paying tax as an individual and not as a company or a trust or any other separate entity. So the second thing that we need to understand is that the capital gains tax calculation will be different for each and every person depending on the amount of income tax that you pay. So obviously most people are working a 9-to-5 job and they pay a certain amount of income tax each and every year. That will determine the amount of tax that you will pay on your gain when doing the capital gains tax calculation. So I just want to share this with you guys quickly. I'll put it up on my screen, and this is basically the tax brackets that we get taxed on, and this is for the 2023 financial year. We're in the 2023 financial year. Here we can see the tax rates for a specific taxable income. So I'm going to work with the top one, anything from 1 Rand until 226,000 Rand. You will pay 18% tax on that money. So you can actually pause the screen and have a look at the tax brackets. It's a good idea to know this information, and this will just help you to realize in what tax bracket you are. So most people are probably paying 18% tax because a majority of South Africans receive an income between 1 and 226,000 Rand. So for the purpose of this video, we're going to use 18% of tax. So next I'm going to show you guys the capital gains tax calculation, and screenshot this and save this and kind of use it to calculate an estimate of what you will be paying on your profit when selling a specific stock. So I'm going to use an example where we as the investors invested 50,000 Rand during the 2023 financial year. So your initial investment is also known as your base cost. This is the terms that SARS uses and all the accountants and so on. So your base cost is the initial amount that we invested, which is 50,000 Rand. And let's say we made a gain of 100% on our 50,000 Rand. So then we have a proceed of 100,000 Rand. Put simply, it's your 50,000 Rand initial investment, your base cost, plus your gain of 50,000 Rand, which equals your 100,000 Rand proceed. So what Sash then wants to do is they will take 40% of your gain. Your gain is 50,000 Rand that you made from your investment, and Sash will take 40% of that 50,000 Rand, and that would be subject to capital gains tax. So the tax that we pay itself is not 40%, but 40% of your gain will be subject to tax. I know that might sound a bit weird, but it's actually easy and it usually sounds more difficult than it really is. So try to follow along. So 40% of your 50,000 Rand, Sash will then look at as a taxable income, and you will pay your tax bracket on that remaining amount. So for this example, we as the individual pay 18% income tax, which puts us in the lowest capital gains tax bracket, which ranges from 7.2 up until 18%, which is the maximum capital gains tax rate. So in this example where we made a gain of 50,000 Rand, 40% of that, which is subject to income tax or which is added to our income tax, then which gets taxed at our capital gains tax rate. And in this example, because we are paying the lowest amount of income tax, it automatically puts us in the lowest capital gains tax rate. One thing that's really exciting that I want to share with you guys is that we as individual investors get a yearly rebate of 40,000 Rand, which basically means 40,000 Rand of the profit that we made in a year is not subject to tax. In other words, we can make a gain of up to 40,000 Rand and not pay a single cent tax on that. And this is awesome because this helps the smaller investors to get started, and ultimately we can make gains up until 40,000 Rand without worrying about tax. So in the example that I just showed you guys, you will pay a very small amount of tax because of your tax rebate. So in the same calculation, we get a 40,000 Rand tax rebate. So our gain was 50,000 Rand minus 40,000 Rand of our rebate, and we sit with a 10,000 Rand gain. 40% of 10,000 Rand would then be subject to tax, and then you will only pay your income tax rate on the remaining amount. So ultimately, capital gains tax sounds super scary, and it might be if you make big amounts of gains, but ultimately this should not stop you from investing in stocks. When I started out, I was so scared to invest because I was afraid to pay tax, but ultimately what I've learned now is that paying tax is not a bad thing because it means that you are actually making money. So with that said, we still want to minimize the amount of tax that we pay legally, and there's certain ways that we can reduce our taxes. Guys, thank you so much for staying until the end. I really hope that this video helps you. So hopefully this will motivate you to start investing and not worry about taxes, or you can take this step and sell your stocks and actually realize a profit. One thing that I've learned is to leverage other people's skills that are better than you, so that they can help you to reach your goals. Thank you guys for watching. I'll see you in the next video. Please give this video a thumbs up if it was helpful. Subscribe to my channel and share this with your friends and family.